Well, selfishly, I am incredibly grateful for Mason Hale, principal at Alumni Ventures, to be joining, because this has been a conversation that I've been trying to have for quite some time. You and I think, missed each other. Our airplanes may have crossed. You were going too hot, or you were leaving Hot Chips when I was coming in for the AI Infra Summit just last week. And you have an interest not only in the AI space, but robotics and the investment space within there. And I've shared my personal why around that for some time now. So without further ado, welcome, Mesa.
Thank you. And Justin and I first connected because I think he does incredible coverage on the early stage venture market. So this has been a long time coming. Connected quite a bit in the past. So great to finally get to sit down and talk.
But before we start diving in and talking about the startup landscapes and technology, can you give our audience a little overview of your background?
Yeah, so I definitely have a rather unconventional path into the venture capital landscape. I mean, I grew up in Houston, Texas, very much inside the oil and gas industry. And so, like, any good Texas boy, went to the University of Texas and studied energy management. At that time, I probably didn't really know what venture capital or even SaaS were, but I knew that oil was over $100 a barrel. That was in 2013. And so, as you can imagine, through that 4 years there, oil went basically in half. And I had a lot of really interesting kind of work experiences that led me to that really kind of shaped where I am today. I mean, the first one is maybe the funniest, but in the same way that venture capitalists, join a startup to get operational experience, the kind of oil and gas equivalent of that I did was doing manual labor on a pipeline over the summers. So that was really interesting. A ton of stories have come out of that, but kind of shows you the meaning of work, to say the least, and the meaning of education. But also kind of subsequently worked at a natural gas startup that was trying to convert fleets of buses and public transit in Houston to renewable natural gas. And so that was kind of my first, experience in a startup. And I was like, wow, this is, kind of a lot better than the pipeline. I kind of want to investigate this further. And then ended up connecting with someone in Austin in the venture industry that basically ran like a corporate scout fund for a couple of Fortune 100 companies. And in that experience is where my eyes went from open to, wide open. I was admittedly in this very large house off of Austin Country Club, finding startups, doing things that I thought were previously impossible, and kept looking back at that. And I was like, wow, that's better than the pipeline. And so ultimately, by the time I graduated from the University of Texas, I was somewhat disillusioned by economics. Oil had gone down, and I just couldn't get this thought of venture out of my head. And actually ended up going to graduate school in Tokyo, Japan. So not an MBA, but like a master's in finance, which is probably more tied to financial engineering stateside. So while I was there, I advised a startup in the advanced material space. Ended up working for this guy in Austin again, which with a 14-hour time difference, those pitch meetings were really interesting. The sun would be coming up behind me, but really, loved the space so much. And ultimately ended up writing kind of my senior thesis on venture capital, or not senior, master's thesis on venture capital as an industry, just kind of looking at founders and if any of their attributes really led to a company's success or growth, which as now that I've been in venture for 4.5 years, full-time, trying to find a statistical silver bullet it doesn't exist really. It was rather naive. It is a lot more complex and fluid evaluation process. But that's really what led me to Alumni Ventures. Been there for, as I said, almost 4.5 years now. Joined as an analyst and am now a principal here.
So Alumni Ventures has a unique model compared to other VC firms. Can you give our audience an overview of how you differentiate?
Yeah, so I'll start with how we raise money and then what the kind of consequences of that are. So we are not like traditional venture firms. So rather than raising capital from university endowments, pension funds, institutions, we've actually raised, I think, just north of $1.4 billion from accredited individuals. So most people, when we started about 10 years ago, would say that's insane. Just the admin associated with KYC and filing K1s makes that process really laborsome. But our entire thesis was basically that, there's been tremendous value creation in the public markets, not just with, companies staying private longer, but just in general, and usually the kind of everyday person doesn't really have access to this asset class. So the entire thesis is we're democratizing venture capital as an asset class, and as a consequence, we now have, I think, over 11,000 unique investors invested in at least one of our funds. So massive number. God bless our tax and accounting team. They do the real work, not the investment teams. But the consequence of that, as you can imagine, for like the founders, is now we have this network of 11,000 people who are personally incented to help out our portfolio companies. And I think we have over 7,000 of those are actually signed up to opt in to help our companies. And so it's this great flywheel. I really say that founders and really startups in general are looking for like three things from a venture investor. And that's usually, or really, they need three things to survive. And that's talent, capital, and customers. And so if we can, provide capital to companies, that's one thing. Being able to, connect them within our own network to other lead investors. So we strictly co-invest, but we have a giant network of people we invest with on, basically a daily basis at this point that we can connect them to. And then within our own network, we have coverage across a lot of the Fortune 500 and in major corporations that a startup might ultimately want to sell into. So it's really been a flywheel effect that really helps both our investors and our founders.
Well, that's another reason why I've just always been drawn to Alumni Ventures and to yourself is that, as you know, in the beginning, what my ethos was within AI was the democratization and responsible AI, and how you guys go about investing is just really a carry on of that. So if we're to dive in and actually talk about investing, how do you approach evaluating? You mentioned earlier that finding statistical anomalies is a fool's errand. So how do you approach evaluating founders and companies that you potentially invest in, and what are some of the attributes that you do look for?
Yeah, absolutely. And I'll kind of start with just what areas that we like to invest in. So venture is very much a mentorship game. And so the partner I worked under for, call it my first 3.5 years at Alumni, came from like a family office private equity background where it's not just venture investing that he was doing. And so a lot of the thematic work we did involved looking at the macro and then finding what the major bottlenecks are within these large and growing markets and finding that as an avenue to invest in. So when I first started, a lot of that was actually in robotics. So in 2021, when I started, there was, a rising minimum wage in addition to kind of widespread labor shortages across all industries in this kind of post-COVID landscape, which really started having these companies that have not innovated on technology and call it 30 or 40 years, being a lot more open to trying new things out. So we had an entire thesis on robotics, call it 4 or 5 years ago. A lot of that was really early. There was some, nice outcomes that came out of that. And then also at the same time, we saw, mass electrification, which in turn required a lot of copper. And so we started doing some of the stuff in critical mineral discovery, which, that was 4 years ago. But now if you look at where the landscape has shifted to today, with just the amount of copper that's needed for, defense manufacturing, wiring within the cable center, all this stuff ends up, playing into each other. And then I would say the biggest shift that everyone is very aware of is, ChatGPT being released in 2022. So people forget that was only 3 years ago. I think we've gotten really almost entitled to progress on this. People are like GPT-5 is not that special. I mean, it got 12 out of 12, I think yesterday on the collegiate programming. It got like a gold medal on the math Olympiad. It's doing everything. And so, I mean, my kind of cynical take on this is I think people who think that AI is not progressing at sufficient speed, every 100 queries they do should be a response from the original GPT-3 model, just so they can, appreciate how far it's come. But ultimately, if you look at it, I mean, like Mark Andreessen famously says, like, move fast and break things. And that's usually at the company level. AI as a whole, as an industry, is moving faster than anything ever has. And it's unfortunately, it's breaking a lot of things, which rapid change is usually a good opportunity for investment, specifically in the venture capital space. I mean, just with GPT and LLM scaling, we're trying to get as much compute as possible. We're trying to move data as efficiently as possible. And then all of a sudden now we have to power all of these data centers too. So really the scope of addressing bottlenecks has just drastically widened. And for us, it's a really compelling place to be looking for new investments.
A lot of times I feel like grit and determination, perseverance are just terms that people have really overused for far too long, and looking at investor or at founders to invest in. Are there certain qualities that you look for in companies that you're going to invest in?
Yeah, absolutely. I mean, I think grit is obviously huge, and being able to, change your product to a rapidly changing market. I always joke, I'm like, if you told Jensen Huang that NVIDIA was a multi-trillion-dollar company 15 years ago, he'd be like, wow, PlayStation is doing really well. You know, like it'd be absolutely insane to him that the guy who did PayPal is now launching a 2 gigawatt data center. You know, things change really fast, and the ability to shift your product to a market is really important. And a lot of that comes from the actual team that is building it. I think people really over index on this kind of, or at least in today's vernacular, this idea of like founder mode, where it's one person going kind of like Achilles and like taking the fate of the company in his own hands. And while there's, elements of that, and apologies, I love Greek mythology. So a lot of the things I talk about internally are related to that. But really the team is such an interesting dynamics. It's very like combinatorial. And the way I view it is, I'm not sure if you're familiar with Greek mythology, but there's one of the more famous stories is called Jason and the Argonauts, which is basically this guy has to go on a quest that's essentially like a suicide mission. It's finding something called a golden fleece that's guarded by a dragon. No one can do it. Everyone dies, but he does it anyways. And what he does to do this is it's basically like the Avengers of Greek mythology. He gets Hercules or Heracles in Greek. He gets Orpheus. He gets this all-star cast of people who do different things, whether it's fighting, navigation, comms, what have you, all onto like an incredible boat. And they end up, getting this golden fleece with a little help of divine winds and divine luck. And if you think about that, it really kind of maps out to like the whole startup idea. To begin with, you need an incredible boat, and that's the product. In this case, there's a guy named Argo who makes the boat, or Argus who makes the boat. That's why it's called the Argonauts. Incredible product. You need someone setting the mission. That's your Jason of the world. And then you're going to go through a lot of trials along the way. Teammates are going to leave. In this specific story, Hercules basically gets lost, doesn't even make it to the end. And at the end of the day, you're going to need some divine wind of the market that where your product is getting pushed by the market with great tailwinds. We're seeing that with AI. And so it's a really elaborate, abstract example, but I really think of it as kind of the Avengers. No one person can do it all, specifically in some of these more deep tech areas.
I love it, and we've talked a lot about AI, and we'd be remiss not to. And with the explosion of AI, we've seen just an influx of hardware startups. But I'm curious, what's next? You're bullish on robotics. I'm bullish on robotics. Why?
So I think robotics, and if you talk about AI, I think they're actually two sides of the same coin. The way we view it is, with every time something's commoditized, it leads to kind of like new titans that are coming up in industry, whether it's, industrial revolution, you have like the Rockefellers, you have all of this stuff. This is one of the biggest generational shifts that, humanity has seen in a while. So what we've now, commoditized is actually intelligence itself. And so that kind of takes two forms. You have like the high skill knowledge work, which is usually solved through software, but you also have these complex physical tasks that were traditionally too hard to do. And that's where the robotics is. So whether it's you're automating coding with like Cursor or something, or you're automating picking and placing within a factory, you're ultimately automating intelligence. And so for us, we view robotics as the application layer to the physical world. And so it's a really interesting space. I'll also caveat here though, robotics is unbelievably hard. The way I always describe it is, you're putting these, if you have a language model and a data center, it's one thing, but you can't strap a server onto a drone. The size, weight, and power restrictions just make it so much harder. So you have to obviously accommodate battery life. You have to accommodate the memory you have within an actual robotic system. How big of a model can you use? And so it's just so many moving pieces, but we have a lot of really, really smart people out there building solutions to progress it forward.
No, absolutely, and we need more and more companies to head back into the edge AI game too to help in that domain. And again, for you, my story, and with my adopted son having cerebral palsy due to a traumatic brain injury, my end game is really to be able to advance medicine and robotics, human machine integration, to be able to give him some normalcy and movement, and as normal of a life as possible. With that being said, I'm also wise enough to know that productization is important for the current things on the market, in order to fund that. Is there a specific technology that is going to advance humanity in the robotic space that you're most excited about?
Yeah, I mean, I think this is the big divide right now. It's is the human factor robot form with as much compute as you possibly can. Is that the ultimate, in the limit? Is that where robotics goes, or is it a series of a lot of very specialized robots? And so I don't think I have a clear answer on that. I think, but that's the technology that people are probably the most excited about. You see, obviously, Figure just raised at around 39 billion. You have Elon and XAI and Tesla building their own version of robotics. So I think that's an interesting subject that I think no one quite knows yet. Obviously, a lot of human jobs were designed for human form factor, and so it's kind of an obvious slot into that. But yeah, it's a good question that I don't have the answer to.
Okay. Well, and that saying "I don't know" is a sign of a wise and mature investor. So, let me ask you this. So, we talked about AI, we've talked about robotics. You're also heavily involved in quantum and semiconductor. Can you tell us about your thesis around those sectors?
So I'd kind of split the two, but on the semiconductor world, I mean, kind of what we call our thesis internally is dirt through data center. So we do, mining, we do energy up into the data center, basically everything underneath the traditional AI infrastructure stack. I mean, some people put hardware in the bottom pyramid of that stack, but we kind of cover all of that. And I would say within the data center, the story is basically the same. It's, we need more compute. We need to move this data faster and more efficiently, but and at higher volumes to basically make these groundbreaking technologies economical to work. I mean, you can do all of this incredible stuff with AI, but if you're losing money on it forever, that's not sustainable. And I mean, the other thing that we think of that's part of our thesis is we care a lot about memory, and whether that's memory capacity or memory bandwidth, both are massively important. But for these kind of agents to work, that we want them to, you're like have a digital Justin who's doing stuff for you. They need to be able to remember extensive amounts of information, which ultimately makes your KV cache get huge at scale. And so we need better memory solutions of both capacity and bandwidth to really live this life of agents that a lot of people dream of. And then the other element of that is we also need to power these. That's going to take infinitely more power. But in the semiconductor world, we're looking at a lot of memory technologies and a lot more ways to make it more power efficient. It's a pretty standard playbook. I mean, but yeah.
Have you seen anything particularly interesting? I mean, memory startups really don't come along very often, but have you seen anything that in particular, has caught your interest in this realm?
Yeah, I mean, I think there's a lot of people both making novel types of memory, like novel memory primitives, but also there's people who are building new interconnects that make the existing memory you have more effective. Obviously, right now there's a lot of talk around high bandwidth flash. I have some questions around it, but it's a tough market just to begin with. But we're pretty excited about really all the technology that's coming out right now addressing these.
Well, and do you, when you're choosing to invest in a company, do you assess or evaluate the technical talent, and how much weight do you place on that versus the caliber and culture of their existing team?
Yeah, so I think technical talent, you can define that in a lot of different ways. So a lot of these companies, specifically if you look at stuff in like silicon photonics, a lot of this is coming out of PhD research teams. And so you can't necessarily expect them to have, taped out 20 chips at Broadcom or something. So this is really where what I was saying earlier, where it's not about one specific person, but you want a team that has done it before. It's pretty rare that you see the kind of, I would say, like archetype of a Silicon Valley founder. Like, I dropped out of Stanford and I'm doing this in my garage solo. That doesn't really happen in the semiconductor world as much. A lot of these people are leaving jobs at major semiconductor companies that have taped out multiple programs. They brought it up to speed, and having that kind of pairing of someone who's deeply in the weeds in the technical side with someone who's actually run an engineering team and brought silicon to market, having the commercial chops with some technical know-how is usually what you're looking for. But at the earliest stage, I don't want to say it's less important, but a lot of it is, can we get this thing to work? And so it depends what stage you're investing in.
On the a flip side of a coin of a question I asked you before, are there red flags that you guard against when looking at investing in a company where once you see it, you're out immediately?
I don't know if there's red flags and you're 100% out. There's a couple things that raise suspicions, for sure. In the semi space, it's comparing a semiconductor that's going to be taped out in like 5 years to NVIDIA's performance today. So, like, assuming no growth of competitors is something that I'm always a little skeptical about. Other ones is just saying like, hey, just bluntly saying we're taking down NVIDIA, I think is a bold statement. There's also certain things you have to do to get investors excited to raise capital. So I fully understand kind of forward facing projections versus like what your team is actually building. Because ultimately, in order to succeed as a semiconductor company, depending on what node you're taping out at, you're going to have to raise a lot of capital. And to raise a lot of capital, you need a CEO who is generally pretty charismatic and can actually convince people. And even before you even raise that capital, you need the CEO to convince other people to join his cause. And so I wouldn't say it's necessarily a red flag, but it does require some further questions. And if you're looking at it more like holistically, though, there's almost always one kind of red flag or point of concern, whether it's the team, the traction, or the product. There's always going to be one area that's not as developed as the others, because if all three, if you have the perfect team, the perfect product, and the perfect traction, then the risk becomes the valuation. That's all going to be priced in. And so the whole point of venture capital is it's risk capital. And so you really need one of those areas to kind of overcome deficits in others.
Absolutely, and one of the legs of the stool that you stand on, or that you talked about earlier, talent. Let's talk about that for a minute. What do you look for in the talent in teams, and also how do you advise startups going about identifying, finding, and attracting talent, especially when they're ready to scale, when you're competing against a very competitive landscape?
Yeah, and so a lot of this does come from the CEO's ability to tell a story. I always say venture, as much as we want to think as we're, super smart in finance, a lot of it is based on narrative, and part of it's even psychological. So if you have a very compelling founder who can convince talent to join him, that's huge. I think right now we're in a very interesting place with talent, just given some of the, call it refocusing at Intel. You have a lot of these, traditional companies who have done very well over the past decade, where certain high-level employees might have the kind of financial cushion to want to leave and start their own thing. The surprising thing to me is, like, I think it's something like 40% of NVIDIA employees are millionaires at this point. I have not seen very much talent leak from NVIDIA, which is honestly big congratulations and props to them for their talent retention. But ultimately, though, you're right. You have to be able to convince someone to join your company and take this risk with you.
Say that there is a founder who has a great idea, has some great technology, because all founders are not wired the same. Maybe they're not that charismatic person that's going to go out there and pull people in. How do they go about telling their story?
Yeah, I mean, I think the founder doesn't always have to be the perfect idea of that. A lot of times you have COOs or CTOs who are extraordinarily articulate. And I would also say there's almost the founder almost has to speak two different languages. There's one that you're speaking to customers in the semiconductor space that's, very technical. And the other is talking to venture capitalists on the fundraising side, which is, I would say, more abstract and high level of of where the company could be versus, exact specs on something or protocols or how the thermals are. And so the way I generally tell founders is when you're raising capital, kind of know your audience. And if they want to dive back in with someone on their product team to go over the technicals, do that in a second meeting. The first meeting should be like high level, this is what we do and this is how we're going to make money and this is why we're the right people to do it. And so I think the more concise you can kind of cover those three things, the better. And you can always have a second meeting.
Hopefully you can have a second meeting because your first one went well. What advice would you give to entrepreneurs or founders that are trying to get their company funded? And are there things that you would tell them to guard against or to look out for?
Well, I mean, the easiest answer is, I think I'm going to butcher this Paul Graham quote that says, like, the easiest way to convince founders is to make a startup, have it do really well, and then just tell the investors about it, which is obviously vastly oversimplifying it. The easiest thing you can do is just show that you're doing very, very well. But ultimately, it's harder than that. And I think you do need this narrative structure of like where you fit into other broader themes. I mean, as I said, the partner I used to work under really focused on the macro. And so being able to tie in what you're doing at this stage and how that fits into a broader vision of where the world looks like in maybe 5-10 years is very important. I mean, a lot of venture is, quite frankly, like imagining what these markets are going to look like based on some premises that you've already accepted in 5 to 10 years and kind of working back of how you get there. So I think just having a concrete plan of how you're going to get there, acknowledging that, you're up against some odds is helpful.
Well, this has been wide ranging and much appreciated. If somebody wanted to get a hold of you or somebody at Alumni Ventures, how would you ask them to do that?
Yeah, reach out to me. You can find me on LinkedIn, or my email is just mason.hale@av.vc. As I said, we are generalists. While I focus mostly on, call it this AI infrastructure and AI infrastructure extension down to energy and other areas, we're really just trying to find bottlenecks in giant industries. And so if you're solving something that you think is a very important problem or is going to, impede our progress over the next 5 years, please reach out. And yeah, I would love to talk.
Well, until next time, hopefully we can make this an annual occurrence. And great catching up. Appreciate the time, Mason.
Awesome. Appreciate it. Thanks, Justin.